Hello, and welcome to this episode of Realizing Revenues. My name's Jeff Bladorn, and I'm the Chief Revenue Officer at Wealth Access. In each episode of Realizing Revenues, we spend time with key executives from bank and wealth management firms, and we learn about some real-world business challenges from their practice. We discover how they're using technology to grow and evolve their businesses and to meet the demands of modern consumers and to realize revenues. Today, we're joined by Troy Jordan, Managing Director of Wealth and Retirement at INTRUST Bank in Wichita, Kansas. Troy's been involved in the wealth and the retirement space for over 30 years, and being part of a progressive banking firm like INTRUST, they've taken steps to unify their client experience across their business lines. Hey, welcome to the show, Troy, and thanks for joining us today.
Hey, Jeff. It's good to be here. Thanks for the invite.
Of course. Hey, maybe for starters, you could just tell our audience a little bit about yourself and about INTRUST Bank.
Yeah, great. INTRUST, fourth generation run commercial bank here in Wichita, Kansas. Really, it's a Chandler family bank. Chandlers have been in banking for generations, and a lot of their success stories revolve around some of the things we're talking about now. Technology, just the definition's different. So the first Chandler was the first one to actually have a vehicle in the state of Kansas and drove out to western Kansas to make cattle loans. We're the first one to have a drive-through branch and the first ATM. Now we define technology a lot differently. So we're largely a commercial bank that had trust powers put in place 100 years ago, and like most trust departments attached to commercial banks, as they've grown, we've all had to transform, and we're all probably a lot more than just trust departments now. I've been in this darn business for 30 plus years, and actually started out I opened up an Ed Jones office more than 30 years ago and ran into a trust account, went to the bank in downtown Wichita and said, "Hey, you guys be trustee and I'll manage the money," not knowing what I was asking. And they later hired me, and I began the career really in the 401k business, and really been in all aspects of the 401k business: sales, service, did acquisitions, record keeping, created a participant education brand that's been fairly significant for us. And then ultimately 10 or 11 years ago, was asked to be in the seat that's responsible for wealth, trust, retirement, and always been affiliated with a bank relative to these things. And so it's worked out, and the bank's about an $8 billion commercial bank, and we're about an $8 billion wealth and retirement shop.
So INTRUST has been utilizing the Wealth Access platform for quite a number of years. As you recall, what was your original use case at INTRUST? What were you trying to address? And maybe share a little bit about how that's worked out for you. Yeah,
great. So along with a few other key leaders, we really were trying to figure a way how we could kind of jumpstart this value proposition really to existing customers first. And it really kind of started out with this aspirational goal relative to fees. If we're bold enough to communicate to clients and prospects that for the fee that we charge, we're going to return to them a multiple of that fee in value across the board before we even remotely begin to tell them how their portfolio performed, to really drive it. And it would hold us accountable then, if you had that standard, to add value around it. And that's where we came very fully committed to this goals-based approach, approaching 5 years ago. But we also knew that we needed to be much more intentional about what's segmenting our client base. What's the client segmentation, aligning resources, talent, and actually what's the experience need to look like with different segments? How often do clients meet? What are the tools that we need to make that happen? And as we were putting that together, and we discovered Wealth Access in particular, it became a really key tool for us to bring all of those things together, not only for a client digital experience, but create this connection to planning and really reporting that would help us with that aspirational goal, that a client would walk out of there with Wealth Access as a tool and all the other things that we put around it, that they would say, I kind of like the way these guys are approaching it. And it really has evolved into taking our experience away from performance, which is still a critical component.
Sure.
But then away from performance, and we started to really connect with clients on a way that we really didn't anticipate. We probably should have, but we didn't. Spouses that were not really engaged because it was performance driven, and what did you do for your fee this quarter, that now revolved around, so I've got this tool that contains pretty much most, if not all, that I can reference, and it's connected to a planning tool that says I got a 92% probability of achieving what I want to achieve, and I just need to know who my advisor is if something happens to my spouse one day. And it really became, oh my gosh, really cool. One of the things we did do, Jeff, the tool that we took with Wealth Access to the marketplace that we wished we could have changed, we really felt, and it really was driven by me, so it probably became an autocratical decision that I really tried to avoid, but I found myself in it, was I had this belief that aggregation was coming on pretty quickly. And that if you're not the first to aggregate, if your client's not the first to aggregate with you, or know about it at least and choose not to aggregate, that they wouldn't aggregate a second time. And that became the basis of really rolling it out to our clients with over $1 million very rapidly, and probably not as an organized way as we should have. We should have really been focused on Wealth Access as their digital experience at INTRUST Wealth, which we transitioned to over a period of time. Our original model, yes, we've got clients now that said no to Wealth Access and to that tool, that had been approached by others about an aggregator, that now know, well, if I want to do that, I'll just do it at INTRUST. So it did serve that purpose, but it didn't get us the engagement that we really needed. And we needed to go back then and say, hey, here's your digital tool. And that takes some work and effort to do. But I know that we wished we would have probably come about it a little bit different way. But it also has been a great tool for us, and it's helped us in the entire segmentation and client experience that we've hoped to achieve. We've got more work to do on it, but that's kind of how we rolled it out. And we're very, very happy about where we're at today. We just got to continue to push it forward.
I presume that you've had some client success with rolling that out. You've obviously got multiple pieces of technology as part of that overall comprehensive view with your client, and multiple team members and specialists that you bring together. How does that complexity come into play, and how have you tried to handle that?
Yeah, great question. Really, a lot of what I just described that we tried to put together, including Wealth Act, we really centered it really with what we call our Wealth Strategist team. And in other shops, they're called for portfolio managers, but we really aren't a big manufacturer of product. And so our portfolio managers that we transitioned to the title of Wealth Strategist are client-facing subject matter experts related to, yes, portfolio management, but they're not picking and choosing stocks and bonds. They're involved in the forward-thinking process, but we utilize that subject matter expertise in that team to be accountable to our advisory team, both in training and execution of clients above $1 million, $1.5 million in which we manage, to help them roll out. So we had to partner with them. So the complexity really first complexity was having our teammates have to be able to roll it out to clients in a very collaborative fashion. And anytime where you've got multiple advisors who've done things differently and Wealth Strategists go about it a different way, sometimes it takes on a little bit of a life of their own within those teams. But that's okay, because we kind of need them to be who they are.
Sure.
But we did focus in that fashion first. So it made it natural for the Wealth Access piece to be coordinated by a couple subject matter expertise within the Wealth Strategist team, along with our Money Guide Pro relationship. And even as we included Genevity within the tool of Wealth Access, that was driven as much by that Wealth Strategist team as well too. Now, as it's evolved, we do have a segment below the $1 million that we've been rolling these tools out with a little bit different client experience. We don't make the commitment to meet with those clients on a quarterly basis, face to face or virtually, like we do with those other clients. So the client experience is a little bit different, but it's really driven more by the advisors because they don't have an assigned wealth strategist to it. So it's evolved into more teams, and that had to happen, but it doesn't mean the complexity gets any easier, because you get more people now that are touching the tools, and that requires management just to stay attentive to it.
Sure.
So the other part of it that we wish we would have done a little bit differently. We were one that said, hey, I don't know if we were skittish, but we didn't utilize the client vault out of the gate. And we wished we would have done that, because that has provided us opportunities of populating their statements, their taxes saved reports, whatever they are, that's the go-to for those. Even if we gave it to them in paper, it provided that opportunity of engagement, and that has really been a significant help for us too.
INTRUST, as you mentioned at the beginning, is part of a bank-affiliated firm, a bank-led practice, really. I imagine that you have clients that have relationships across business lines within the organization as a whole. Perhaps that's even a prime area of opportunity for the wealth management department. What types of issues does that present in an organization that has multiple business lines, and how do you go about addressing those?
Yeah, being a 140-year-old organization, family run, has an amazing amount of benefits. A lot of autonomy for the business unit leaders to run the businesses that they feel is appropriate to do. So, decision making actually for us is really quick. An organization that maybe you would think is 140 years old, so wow, we're slow to adopt and slow to move. The challenges that presents is you can start to have silos that prop up, because the business unit leaders really have autonomy to make those decisions. One of the areas that's helped us break down that barrier for us and the bank is we created about 3.5 years ago this Premier Services. So the wealth team is accountable for providing the consumer banking solution set to our highest individual and family deposit and banking customers. So we've been able to kind of bridge that gap that our client advisors, which used to be wealth advisors, we've transitioned to client advisors. And when you do a whole goals-based balance sheet approach, you can't do that by ignoring the cashiering and the CDs and the savings. And so now that's under our purview. And so our advisors are compensated that way, and their goals are wrapped around that. So anything consumer and wealth and trust related is handled by the same team. Now, our clients can bank anywhere they want to. We're not saying you have to bank with our Premier Banking team, which is embedded within the wealth team. But what that doesn't solve, and that's been really fantastic, by the way. Now, we've got a wealth organization aligned with deposits that in the past and in other traditional shops, the motivation is we got to get those deposits over in wealth because they're probably incented to do that. Now we're holistically incented, and we take out the product and valuing that to determine growth of their portfolios. So that's aligned. But what it hasn't necessarily accomplished is this alignment with commercial lending, which we've done a really good job of that over the years, but it's more heavy lifting and building confidence with those commercial lenders to get us involved in those relationships. But what we have transitioned to is a formal process utilizing Salesforce, another technology tool, that we've developed what we call an account review. So all relationship managers across the whole entire organization do 3 account reviews of their most important clients that engages wealth, retirement, treasury management, consumer, and anybody we think is important. That is a review of that account and what are the next best steps. And now we're into year 2.5 into that process. That during COVID, we've not been able to roll out a lot of what the next steps are, because a lot of those for us as a relationship bank is we need to get back out in front of our clients. So we're going to have to hold ourselves accountable to those tasks that we populate in Salesforce that will lead to opportunities within wealth, and then also holding our teams accountable to, especially in retirement. We've got a lot of retirement plans that we need to get them banking with us. And that's not intuitive for a fiduciary run organization, but we're getting better at that. So that's provided challenges, but also I think we're making some inroads, but we're going to really have to hold ourselves accountable for execution on that. And that's not natural. We tend to, in the commercial organization, that we got leaders of a relationship, and those leaders are on that relationship till they retire. And then they're the ones that have kind of been the gatekeepers deciding when's that opportunity to introduce wealth and retirement. And those barriers are coming down with this dialogue. So we're excited about that.
Sure. And as you've worked through that, are there areas of the technology that help with that, the blending of that client experience across the lines? obviously it's more than just the technology component, but that digital experience for your clients. Are you seeing that? Is that an area of emphasis to help to bring to the client a holistic view of their relationship with INTRUST?
Sure, absolutely. And we've seen that by putting the premier services within as partnering consumer with Wealth and Trust and utilizing Wealth Access that we directly import what they have with us. And because of the goals-based and whole balance sheet approach, it's an easy conversation even for held away competing banks and wealth operations. So that really has been really special in this whole experience. We still are we've got commitments that we would really like our clients that go to the online banking site to do their online banking, and we're working with Wealth Access to populate their wealth balances and their wealth accounts in the online banking site, so they can also get that experience even if they're on the online banking tool. So we're working on that, and we're confident we're going to get there with it. We still haven't bridged that gap relative to commercial, and we've been brainstorming about how we could potentially accomplish that. And those brainstorming ideas have come around. Can we, in our business unit, provide subject matter expertise about business succession and business transition conversations with subject matter expertise, partnering that with the commercial lenders so that we can maybe build some planning experiences with those small and medium-sized businesses that lead to when, hey, it's time and they get an opportunity to sell that business. What really do they need to get out of that business to achieve their financial personal goals? And then that leads itself to what business valuation tools do we need to be, digital tools, do we need to be utilizing and partnering with to make that an even more valuable experience? So those are some of the things we're doing and things that we have aspirationally said we probably need to accomplish. And some of that will involve the Wealth Access piece, I'm sure, because of the data that we utilize and what that experience needs to be. We just haven't been, well, part of it is prioritization. And then the other is we've not pushed that initiative forward as much as we'd like to.
So, Troy, you oversee both the wealth and the retirement practices at INTRUST, and we've had some conversations in the past as to where some of that can cross over as well. But what do you see as some of the business opportunities there? And is there a comprehensive unified client experience or advisor insights that provides value to that concept as well?
Yeah, we had to kind of point the finger back around at us and say, yeah, not only do we need to be able to work more with our partners in the commercial bank, and that has been a significant part of our new business growth is business liquidation, because it comes in chunks. But we've got this $3 billion of our $8 billion is in retirement plan assets and in participant accounts. And so we have really focused on how do we leverage that business. And we had to kind of get out of our own way. I mean, we have fiduciary is in our DNA across the team, and no more so than our retirement plan business, where we were one of the first people 25 years ago to say, you need to offload this fiduciary responsibility. Now everybody wants to be a fiduciary in the retirement plan business. But that fiduciary background and DNA caused us to not think, man, do we really want to cross-sell? This was the thought process. Versus, well, of course we need to do it. We're a fiduciary. We care about these participants on how they've saved. We've got this perfectly aligned wealth fiduciary shop. And how can we do that? How can we do that? So we're going about trying to directly populate, at least on our platform retirement plan business, where we're actually doing the record keeping. And we have those plan assets. And then we've created a solution within the retirement plan to manage those assets while they're in the 401k plan, but also get involved in planning if they're above a certain age level with a certain account balance, that an IRA rollover and held away assets, where we're now making plans and initiatives to how do we populate that directly into Wealth Access to have that tool accessible to us when we get those face-to-face meetings with those higher balanced, more mature individuals that really need to have that more diligent planning. And we have one very, very large 401k plan that has really embraced that, and it said, you are our go-to for all of our participants, which are 6,000 strong. And so we have to segment it, but in particular, those high balance, more mature, later in life clients. And it has led to millions of dollars of held away assets And now they're experiencing the data that we get through utilization of the Wealth Access tool and become wealth clients, along with still participating in the 401k plan because they've not retired.
Right.
So that's really a real focus for us, and we've just got to figure a way to scale it up, because the challenge for us is we still believe a personal relationship with digital tools is what's winning the day on that. It's not just the digital tools alone. Otherwise, competitors who are only digital alone would have already solved this, and it's a huge need for these customers.
You've shared quite a bit with us already about what you have done, what you are doing, and other areas that you're looking at. But I'm curious, are there other next steps for INTRUST as an organization, or maybe that you're seeing across the industry that you think is a real opportunity where, again, you could innovatively utilize technology to drive solutions?
Yeah, one, and it may not necessarily be specific to the tools we have today, but we need to make some inroads, and it's not just us. This is a segment issue, in that there's been a lot of enhancement and accessibility to private equity solutions to our clients and other clients, and it's one of those still really attractive pieces where value can be driven on a performance level. And there are now solutions that are driving that, not just to clients that qualify. You've got accredited and qualified, where you can now have tranches as low as $100,000 acceptance. And we've got a real challenge that's a manual process. It's an experience that you can't mess up from a reputation risk. And so we've got technology issues relative to the custodian of that, relative to the plumbing, and to the providing performance information, all the way to aggregating that within somebody's balance sheet. And how do we deal with that? So one of our focuses is how do we streamline that? We're trying to look to entities to help us with that. And some of that is actually maybe even workflow driven as much as it is client experience driven, but they all kind of come together. And I think we got to be really careful about that, because it's one of those you really can't mess up, because there's some real client reputation risk when you provide these non-liquid asset opportunities to clients that may not fully understand them. They understand them enough to be qualified for it, but until they experience it, it's not like what just populates on their digital experience tool. That's today's updated value, because it's not. So that's one area that we're spending some time. And I think probably a lot of your clients, as well as a lot of our peers, is we're going to figure out what our position at the very least is on crypto. We need to have a position.
Right.
And I think it's probably getting out there away from us a little bit, that we need a little bit more than a position, because a couple things are going to happen. Somebody, and this is not just Wealth and Trust, somebody's going to walk in as a small business and say, hey, I want to pay off my commercial loan with Bitcoin. What are we going to do with that? Somebody's going to pass away, and we're going to have an asset which is characterized as a commodity today. And how are we going to handle that? Even before we talk about solving it for a client in an asset management scenario where 1 in 5 people now own it. So those are some challenges for us. And I know that didn't directly impact some of the client experience stuff that we talked about, but we've got to spend some time on that.
Yeah, interesting. Not only a challenge, but perhaps a major opportunity for those organizations that look to solve it quickly, right?
That's a great point. And I think, Jeff, I and others that have been doing this for 30 years, you nicely called me old. We tend, and a commercial bank like us, we're still a risk management entity. We need to think like you just said there. We need to think more like, what are the opportunities? Because the first thing you just heard me talk about, I've just shared with you challenges and opportunities. But there are more challenges to us. We got to get outside of ourselves and say, at the end of this, there could be some value add, not only to the customer, but value add to us. And we got to think a little bit more like that. And that's a challenge for, I think, most community banks.
So Troy, the client experience that you mentioned, the holistic view of a client's financial balance sheet, how has that resulted in business opportunities for INTRUST?
Yeah, good question. You can be really, you can be focused on that, on it being an aspirational to serve existing clients, but clearly there's got to be a growth motivation to it, and it has resulted in that. You can't argue with the data. the anecdotal feedback from existing clients about that experience and the tools is one thing. But we've really experienced over the last 3 years what really stands out to us. Not that it's all of that client experience, all the tools, but by being able to aggregate held away assets and have conversations that say, hey, we're managing your portfolio in a little different way because we see you've got some held away dollars someplace else, managed in another way. And when you put the planning tool with it, it kind of says we need to manage it a little different way. So not only how we go about managing the dollars to maximize return and still minimizing risk. The other is you've got clients that are saying, wow, this experience is pretty cool. And you guys have incorporated my held away assets. And we've seen a significant increase in capturing those held away assets. We have an annualized new revenue goal, and our what we call additions, which would be the held away in particular, has more than doubled over that 3-year period as a part of our total sales that we've achieved in those 3 years. And over the last 4 years, 2 of those 4 years have been record sales years, partially driven by those held away dollars. So we know it works, and we just need to figure out a way to do it more efficiently and do a lot more of it. Not all of our clients choose to utilize either adopt the experience, because we're still going to manage money who don't want a goals-based experience, that don't want a digital solution. But at least those that do, it's really resulted in returns that causes us to say, how do we just get better?
That's outstanding. Great feedback. I appreciate that insight. And as not only as you've had success with current clients, but have you considered utilizing this with prospective clients and perhaps seeing a similar business opportunity and results there?
Yeah, we've got some work to do relative to proposal systems. And the other part is for us is we know that this is our digital solution. So when it comes to a client who throughout that proposal process wants to know about digital solutions, it tends to be incorporated into that conversation. But what we have not done is the intentionality of what could be potentially done is utilizing it from a prospect standpoint that I know that others are utilizing, and I think we could do a much better job of that. I think part of it is that we've got a huge amount of existing clients that bank with us. How can we use that data related to existing clients with banks that are prospects that are not with Wealth today, that we could pre-populate the tool even before our first meeting? Those kind of ideas we've kind of kicked around. We've not executed upon them, but we could do a lot better job with it. And that's another area that we can work on.
I want to thank you. Thank you so much for joining us today, for sharing your experiences and your perspectives on things. I'm sure that our audience has come away with some ideas that they might be able to apply to their own businesses as well. And to our audience, thank you for taking time to learn more about how your industry peers are innovating through the use of technology to address their business challenges and to realize revenues. Until next time, I'm Jeff Bladorn with Wealth Access. We'll see you soon with more executive insights on realizing revenue.